My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to make you some money. My job is not just to entertain, but to educate, teach, put it in context. Call me at 1-800-743-CNBC or tweet me at Jim Cramer. What a difference 14 years makes. This morning, we learned that single-family home starts are at their highest level since September of 2006. And I am telling you that is good news for the U.S. economy, even as the Dow dipped 12 points today. S&P advanced 0.03%, and the NASDAQ, home of big tech, climbed 0.55%. 14 years ago, the same strong single-family home number spelled disaster because the housing boom was the root cause of the Great Recession, though that was still a couple of years away. Hundreds of thousands of Americans borrowed money during that period using no-doc mortgages or took out home equity loans against their property to fix them up and flip them, or actually even sometimes for the down payment. Yeah, everyone was in on the game. As the Federal Reserve raised interest rates again and again and again, 17 times, throwing cold water on housing, we ended up with a huge number of unsold homes and then a crumbling mortgage market, which led to collapsing banks and the destruction of trillions of dollars in worth. The whole financial system was almost brought down by housing and the reckless way Wall Street decided to bet on it. We actually still haven't fully recovered from the crash psychologically. But 2021 is not 2006. Last time single-family home sales hit 1.67 million, we only had 298 million Americans in this country. Now we have 330 million. No wonder there's only a 2.3-month supply of available homes, the lowest I could find. No wonder housing prices are rising. There's barely any inventory. When I saw these numbers this morning, I immediately heard a slew of commentators wring their hands about how we've got another dangerous housing bubble, so the Fed needs to start tightening. When the Fed starts tightening, it's going to knock down stocks. We got to shut down housing because it's too inflationary. Oh, my God. I mean, can anyone just say it's good? What a world. It's insane, people. We got 6.7% unemployment, for heaven's sake. The economy is in zero danger of overheating. Believe it or not, today's huge home sales number was the first big number that I've seen that I was happy about. Certainly not unemployment. It's terrific news. Only 10% of the economy is actually in housing. But you know what? We say it punches above its weight, meaning the pin action from housing is incredibly strong in this country. Now, with the pandemic still raging, think of the housing boom as a bridge that tides us over until we have herd immunity. Right now, we're vaccinating roughly 1 million people a day, a major improvement versus where we were a couple of weeks ago. But you know what? We actually need 2.5 million a day to really get somewhere. That's the number, magic number, 2.5. In the meantime, the brilliant scientist, Dr. Eric Topol, whom I follow on Twitter and have read his books, he's great, saying, why doesn't President Biden use the Defense Production Act to make N95 masks so that we all get the best kind of protection while we wear masks? On top of that, we need enough home tests so that everyone can test themselves each morning, like I will be doing soon with my care tests that this has emergency authorization from the FDA, so it's good. And you just get these and you do it at home. You just swab. And, a couple minutes later, you find out whether you have it or not. But we haven't had the political will or the ability to beat back the interests that don't want us to have this. They don't want us to have this. They think that it's either not good enough or whatever. When we get these things, when we get them, when everybody gets them, I got to tell you, that is going to be the end of when we get sick and we go to the office, not testing ourselves every week to see whether we're sick. We want to find out before we go to work. Okay, admittedly, it's hard to open, but that's not so bad. Wait till you see next week when I try them. When I try them on the set, you're going to see how easy it is. But while we wait for the whole population to get vaccinated, where does that leave us? America's a service economy, people. In fact, 2/3 of our GDP comes from the service sector, including travel, leisure, entertainment, sports, dining out, carousing. Exactly the things you can't do until we beat COVID. I'm thrilled that we finally have a new federal policy on everything from masks to shots, and hopefully it's going to include these antigen tests at home. But we've been so hobbled by the previous lack of a federal response that it could be difficult to get things rolling, which means a huge chunk of the service sector stays on ice. But then there's the one bright spot that I like to talk about that other people are already saying is too overheated. I like talking about housing. And the killjoys, who instantly talked about how this great number must be dangerous, simply don't know what they're talking about. A booming housing market is good for this economy, even if the last one ended horribly. Doesn't mean that this one has to end horribly. In fact, it could be great. What makes me so confident that 2021 is different from 2006? First, unlike 2006, right now, the consumer's incredibly solvent. I mean, the most they've ever been, frankly. Before the financial crisis, we would constantly lament the terrible balance sheet of most American households. Now it's the opposite. People are brimming with cash and rapidly paying down debt. It's actually a major reason why the bank's earnings weren't as good as we'd like. Second, I know we won't have a repeat of the financial crisis because in the aftermath of the crash, the government set up new standards that make it much more difficult to get a mortgage. You can't just go in there with no cash and no docs like in 2006. These days, you need a sizable down payment and documentation or no dice. Ask me. I do a lot in the housing market. I can't just get a mortgage. It takes a long time, even with DocuSign. Sure, there are some outliers, but overall, we're perilously close to having no loan demand because it's too risky. The government doesn't want it. Plus, I'd argue that buying a home has become more of a necessity for the younger generation because they're tired of living with their parents, and they're fleeing the cities in droves thanks to COVID, and many of them are having families under the same roof. It's time to go, people. Yet even with all this demand, the price of housing is relatively reasonable. Last week, KB Homes, big home builder, gave you a price breakdown when they reported of the areas they sell into. Get these numbers, because they're not outrageous. $344,000 for a house in Southwest, $312,000 in Central U.S., $283,000 in the Southeast, and $640,000 on the West Coast. But sure, California's expensive, but it's always been expensive, and prices are coming down rapidly in some places like San Francisco. That's not inflation. It's the status quo. Again, those numbers are big if you have no money. I know that. If you have no job, and I feel terrible. But when you look at those numbers, that is not inflation. Third, what else are people going to buy? Given the severe constraints imposed by COVID, where else can you spend your money? Fortunately for the U.S. economy, there are two new forces at work driving spending: remote work and remote schooling. We're now going into a hybrid mode for work. It's become optional whether you go in or not. However, not working is not an option. I don't know if you see it, but the people who sign on to the hybrid model are actually working more hours because they just can't clock out. That means people need to make rooms into offices. Many of the newer homes actually come with built-in offices because of this. But the older ones, they need to be remodeled. Dream come true: Lowe's, Home Depot. Hence why these retailers always rally when we get these good home build numbers. It's algorithmic. And it's incredible to me, but at one time, these projects would have been funded by home equity loans. Now people just pay cash, not even credit cards, cash. That's not inflationary. It gives the painter some work, though, which is how you get these nice runs in Sherwin-Williams and PPG, although the number of PPG after close nobody liked. But let's deal with that tomorrow. Now, people love the decking stocks. I told you about that AZEK. Wow, AZEK is really good. Trek's all-time high. The latter, AZEK is furiously trying to hire people to meet demand. Then there are the retailers that help you furnish and decorate, along with the device makers and video game plays and computer companies like Hewlett-Packard and Dell and Apple. They're all benefiting from this fantastic housing number and from the hybrid work style. Finally, people are buying homes in the suburbs of the country, and when you do that, you need a car. And that's why CarMax is the third best performer this year, and GM's the number one performer in the stock market. I know it's not just EV. I see an auto boom coming. So do you. Good news for Ford, by the way, and the broader economy, since cars put a huge number of people to work. Home to cars to employment. The bottom line. There will come a day when we can go back to being a fun service economy again, but we are so not there yet. Think of the housing boom as the bridge that helps us get there. And unlike the modern day classic, this is not a bridge too far.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.